28th shooting in a building that houses NFL headquarters. The victims included a police officer, a security guard, and 2 office workers. Tamura accused the NFL of hiding evidence of brain injuries. America's listening to Fox News.
Good morning. And hey, y'all, welcome to Winning at Life, the Saturday radio show where we bring you financial talk. And that's what we're going to do for the next 3 hours. Gosh, a lot on my mind. We've got Dwayne Stein going to be with us first hour, so we get to talk interest rates, mortgages, best practices. I'll tell you, just from having a home, real estate, one of the greatest things about this country is you get to have a stake in a piece of it, the land. I've talked to people recently several times, and I'm about to go deep into it, but I'm going to try to hold back. But it's just kind of discussions I've had recently with people that like to acquire property, whether it's one property or one house or 1 acre or 1,000 acres. You know what they say, they're just not making any more land. This is all there is. And what does it do over the long term? It goes up in value. That is their justification of I want more land. So there's no oversupply of it. There's not too much land. So just think about how important that is. And in this country, you get a piece of the pie. You get a stake. You get to buy land in this country. You can have a house on it, which makes it more valuable as well, and it goes up. That's and you look at other countries, you think about that. What are they getting to buy, or what is it they're buying? And some of these other countries, I'll use China. What they just get thrown in these apartment buildings. And they really don't have stakes in that. They really don't have a chance to control their own destiny like we do here. Such an opportunity. Hour 2, we've got Jude Heath of J. Heath and Company CPAs. And I want to, and we're moving into the last quarter of the year. This is kind of some time left to shore up what you're going to do from a tax planning, preparing for your tax return next year. This isn't like we've moved into the first quarter of the year and the cake is baked. We're still putting it together, and there's still time. I'll share a recent conversation with you with a tax firm that I had regarding that in hour 2. And then there's more, of course. Who knows what I'll come up with throughout the show. So once again, I am your host, Gregory Ricks. I've been doing this for better than 15 years. If you got some questions, email us, info@gregoryricksandassociates.com. Go check out the website at gregoryricksandassociates.com. If you are looking for some help, something motivates you here is I just need a phone call with Gregory's team. I need a meeting with Gregory's team. It's easy. There's one phone number, whether you're in New York of all places, but here in the Gulf South, or you're in Mandeville, you're in the New Orleans metro area, you're on the Gulf Coast of Mississippi, we have offices for you to go to and sit across the table like you're at a breakfast table meeting with an advisor. That office number, no matter where you're listening to the show, is one number to call, 504-832-9200. And they ask you, well, how'd you hear? What call? Tell them I motivated you on the radio show to pick up the phone and call. You can do so now. You can do it tonight. You can do it at midnight. You can do it Monday morning. You can do it Sunday after church. Whenever you want, pick up the phone and call. But here's the problem. You procrastinate and you forget about it. But what you need to do is take action and change your future. We're going to go ahead and pull Dwayne Stein into the show. Hey, Dwayne.
How you doing, Gregory? Good to speak with you again.
Man, I'm doing awesome today. So happy to be here. So glad you're on this hour as well. So much to talk about with what's going on lately and what's going on in the future. And that's kind of where I think maybe a focus should be, to take people a little bit further down the road. And you heard what I was saying about the opportunity that we have in this country, and you get to own something, have a real stake in the future with something that generally goes up in value. I won't say 100% of the time. You could make a really bad decision on location, and it goes to, Hades in a handbasket. But that's kind of a rare thing. Your thought?
And I think, Gregory, I mean, the one thing, and this is what you've been doing your whole career, and truly the one thing that is a wealth-building tool, in my opinion, is a home. It's your largest risk, right? But it's proven time over time, unless you just make a goofy decision, and things do happen, right? We're not saying every single person that buys a home bats 1,000, but the opportunity to be a homeowner, like you're saying, to own something, you nailed it, right? They're not making any more land. So those opportunities to own dirt, who would think would be so important? And again, even when you look at everything that's going on over the last couple years, home values are still going up. Median home prices are still going up. And I think it's just so important, and we discuss this all the time with your audience, and just in general when I'm talking to clients, is it's a marathon, not a sprint, when you're looking at purchasing a home. Now, if you're a fixer flipper and all that, that's a whole different ballgame. But when you're looking for something to somewhere to the protection of your family, the roof over your family's head, purchasing a home is just so important. And over the long haul, you will see profits. You will see values improving, no matter what market you're in. And look, this is as tough as, I don't know, I wasn't around in the 70s when rates were 21% and stuff like that, but this is as tough of a market as we've seen, and we're still seeing prices going up, right? Which is a great thing.
Yeah, so part of this, and I've seen people predicting that housing prices are going to go down. Well, they got to start building some prices and increase. They've got to start building some houses and to increase availability and increase supply so that prices may go down because of that. And I just don't see that as well. And one of the things you've talked about in the past, where we go back 20 years and saw where housing collapsed and such, and that's because everybody was borrowing. There was a lot of supply, and they're making, to put it simply, we're making bad loans that weren't going to hold
Absolutely.
up. If they could breathe, they got a mortgage. And
fog a mirror. We call them fog a mirror loans, Gregory. Hey, breathe here. You fogged it? Great. Here you go. Go get one. While you're at it, do you want 2 or 3?
If it's
You know what I'm
bad,
saying?
why,
I mean, it was
why
out of
don't we
control.
just make it worse? The market flooded with foreclosures, which created an oversupply and really slowed the equity building. Whole different world, and we have a lack of building. And housing starts, those numbers have came in really low now.
Yep.
And
Yes.
interest rates, we got a tweak, and we're expecting interest rates to go down in the future, but it's not going to get back to where it was 5 years ago or 6 years ago. But I think it gets to a reasonable point, but you're still going to have value growing. I just wouldn't sit around and wait for it to be discounted. You could have some areas where that happens, but generally overall, you're not going to see that in the numbers, which you might say that's kind of bad for people wanting to buy a home. Okay. But it's good for homeowners and those that do buy that their values are going to go up.
Yeah. And I think when it comes back, when you talk about Gregory, we need to see builders building more. It circles right back to what you said when in your opening. They're not building more land, right? So if I'm a builder and I'm paying a premium for dirt, I'm not opening my doors every day at my business to say, let's go break even, team, or let's lose money. So the days of the starter homes, that has all been elevated, right? So because they're not making more land, when people are, and that is why now builders are sitting on the side right now a little bit more, because why? Because they want to see what's going to happen. And it costs more for them. People don't understand it costs more to build a home than get a mortgage. So there's premiums that they're paying these builders, right? And we see it when we're doing our construction loans. So there's a lot more that goes into that. So that's where you're not going. And when that builder does decide to build, they're not going to do a discount build. So that's where it's so important to understand why you're not going to see this fallout or this fall in home prices, right? But so many folks listening to your show and that I speak to all the time, you'd be amazed when, like you said, people go, well, I just can't afford to buy. How do you know? That's all I always tell my listeners and the folks I talk to. How do you know? What are you using to determine that? Some online calculator? Just some TikTok you watched? Like, let's look into it. And maybe all you can afford is $125. Oh, and that's not something you want to be in that price range. Okay, let's build a plan to get you where you need to be. How far away are we? Let's just not throw in that towel.
Well, let's pick up on this process when we come back from the break. Hey, you're listening to Winning at Life with Gregory Ricks. We'll be right back.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
Would this be your Social Security, your 401k, pension, lump sum, your debt, student debt, credit cards?
You all are so good. I've listened to you for years. Sometimes I'll pull over to the side of the road and just listen.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify. Investment advisory services offered through AEW Wealth Management LLC.
Gumbo Nation, you did it again. Thank you. 10 plus years on air, Mortgage Gumbo Dadcam has grown because of your trust in me as your local preferred lender with all your home loan needs. My recent recognition as a national top lender is awesome, but being your local lender is what matters to me and why I'm so thankful. I promise to continue to earn your trust in making your needs my priority. Visit MortgageGumbo.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Less than half of Americans have drawn up a will. If you don't have one, you know you need to get one. But what if you do have a will? Is it up to date? Has anyone in your family been married, divorced, or passed away? Have any new family members been born or adopted? Don't leave your loved ones in a bind. Call me and we'll make you a plan or update your existing plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
If you do not have money set aside, you do not have retirement assets, you don't have significant savings, you're thinking, well, when should I turn on Social Security? I'll answer that for you right now. You should probably work as long as you possibly can and as much as you can, because that means you defer Social Security as long as you can up to age 70. And you can keep working past that, that's fine. But at age 70, you have to turn it on because you've maximized it there. And you've created the largest possible payment, and you're going to need all of that.
Winning at Life with Gregory Ricks, Saturday mornings at 10 on News Talk 99.5 WRNO. Find us on the Winning at Life app or GregoryRicks.com. Investment advisory services offered through AE Wealth Management LLC.
You're listening to Winning at Life. I'm your host, Gregory Ricks. We have Dwayne Stein with us this hour. We're talking with you about the unbelievable opportunity you have to have a foundation of building wealth. And what you get to do in this great country we live in is buy real estate. And they'll loan you money for it for years and years to pay back. And something that high probability is going to grow in value, and that you could sell it later and buy something else you want. Or you're not limited to having more than one home or property or business property. Dwayne, am I wrong?
No, I mean, what a great way to put it. You're not limited to one, right? Look, get as many as you want. There's no limit, so to speak. And that is a great statement there on when it comes to purchasing a home, right? There's so much opportunity, and especially in today's world, for those who want to invest and do those things. I mean, the loan programs we've got now are just so aggressive, and they're so good because at the end of the day, we understand that for the most part, right, people are going to pay their mortgages back. And so, and it is different than in 08 and 09 and in the fog of mirror we were joking about in the previous segment. And now there's so many different programs out there, but we've got lending so perfected now. But we also understand that everybody, and I think this is where Gregory and Winning at Life Nation, there's so much information out there, right? On the social media sites, the podcast, the TikTok, all these things that it's confusing, Gregory. If imagine as a first-time home buyer, I mean, it's overload. How much to put down? I can't afford. What does my credit score need to be? What program should I go with? And it's intimidating. And I think so much of that, and a lot of it is misinformation, but so much of that, I think, keeps folks on the sideline. And then maybe you mix in some old schoolers who think, well, you got to have 20% down and all those things that I see it all the time. It keeps so many folks on the sideline, and maybe even in these, let's call them challenge times, it's keeping you from buying and finding out what you qualify for, and maybe missing out on an opportunity to start building that wealth. Because, Gregory, you just said it. You could buy more than one, right? A house isn't a child. It doesn't come with a return. It comes with a return policy. You could sell it. You could buy another one, right? It's not a kid where you go, all right, hey, won't stop crying. How do I give this back? A home, you could buy more than one. So find out. You're not locked into that house forever. But what are your plans? We understand life happens, but let's have that discussion. So you nailed it there. It doesn't have to be just one.
Yeah, I remember my first purchase, and it was kind of difficult. And it isn't so different from today of, where it's competitive and bids being on. But what I was in the market with buying, because I was looking for value back then, was foreclosures. And there was always some of those coming available, but I seemed to always be getting outbid on those. And then finally, I think after 3 deals was missed, I said, and then there's this next one I was looking at, and it was a larger home, but I said, I'm going to make sure I step up on this one, and I'm going to pay more than is probably being offered or thought what the value was. And some said, what, you overpaid? I said, but I got it there. And I'll tell you, when I sold it, and I don't know how long I was there, maybe a decade, and there needed to be work done on it, but I sold it for a bunch more than I paid for it. I wasn't trying to flip it the next 6 months or the next year. I was going to be in it for a while. And the home I'm living in and moving towards current today, the home I'm living in, I wanted to build a home, but I needed to buy the land for it. And it was difficult to acquire, and it was competitive, once again, marketplace. And this was going back, I don't know, I've been here in this property about 12 years now, but I just remembered I paid a premium. I overpaid and to get the property, and basically I got 2 lots. And people said, well, why didn't you do that? Why'd you overpay? Are you worried about that? I said, no, I'm going to own it for 30 years. Because it doesn't matter. But I can tell you, I was square in 2 years. And then I built on it, and it's just continued to go up in value. And it's not the only property I own right now. And yeah, I got a pretty good interest rate, but I bought something last year, and I don't know, I think my money I got was 7% or whatever. And interest rate's kind of high. Yeah, but so what? I got more land, and it's going to go up in value. And that's just kind of that understanding our opportunity and looking at the long term. If you're kind of buying it for a year and say, well, I'm going to sell it next year and get something else or move somewhere else, you might have a little bit of a problem. So I'd like you to address that.
Yeah, and here's what I would say. If I'm having a conversation with somebody that maybe says, hey, Dwayne, heard about you on radio, you work with one of my employees on a reload program, they're saying maybe a 2-year contract, right, is when I may be here. But I don't want to rent for 2 years. They're going to give me X amount, for living expenses. Then let's look at that. We're going to look at that differently than somebody who, hey, I'm getting relocated here. It's my final move. I'm an executive manager now, and this is going to be my 30-year. This is where I'm going to retire. This is my final home, right? So it's such a different conversation that you've got to have. And that's where we start looking at, okay, what kind of money are we looking at? What are we going to do? Because if you're going to be 2 years in, let's use that house. Let's get you in as cheap as possible. So that way, let's get that seller to help out with some things to where while you're here, you really, if it stays status quo and you go up 3-4% in your home value, you're making money. Instead of, hey, look, we're going to dump all this money into it. Let's get you in for the minimum. And there's just so much conversation. And that's why it's so important for first-time home buyers, Gregory, as well, because, the Gen Zers and all, there's so much data so readily available, and you don't know what to believe. But what is the game plan as you sit here today? Is this hey, this is, we're looking at a 2-bedroom, 1-bath. It's our first home, okay? Families in the future. Well, then we know that 1,100 square foot house, probably you're going to stay in it till the seams burst and you're going to make a move if it's 5-6 years. So let's look at what is that and find that right program to make sure that you're doing it right. Because over the long haul, it's an investment, but we want to be smart about it. And we got to have a game plan put in place to know that if we have a little bit of a downturn or whatever it is, that you're still protected. You're not overloaded, right? I mean, Gregory, there's a lot of people right now that I'm refinancing that had 3% but then ran up credit cards. And those people that bought houses at $600,000 because it was 3%, maybe they were a $400,000 buyer, right? But they stretched that limit and now built up all this stuff, and now they're in a situation where I've got to refinance to save money. So life happens, but now they're able to use their home to still take advantage of that. And that's what is so beautiful about home ownership.
So
it gives you a wealth tool.
What's the 30-year mortgage at right now?
Yeah, 30-year, right? Yep, 30-year right now is at 6.38. 6.38. So that trend since September, September, the first week of September was right at 6.29. It's the lowest it got. And then we've been hovering, within those 10 basis points.
Yeah.
So you're not seeing that on a
So
rate sheet.
it is more than 3%, but it's a lot less than 24%, like those credit cards people run up and make that mistake. And part of getting right for the financial futures, they've got to get out of that, get that debt paid off, and quit building up credit card debt. Use a credit card. What's the purpose for it? Is to swipe right now and you pay it off at the end of the month. You should never carry balances forward. Why pay that interest rate? To me, it's like free loans. I'm getting 0% because I'm not financing. Yeah, there's a fee that swipe, but that goes to the person selling me the product. And sometimes they'll say, well, there's going to be a 3% added fee. Okay, fine. Doesn't matter. I'm ahead because I'm not paying 20-something% on revolving charge. So it's understanding the power of money and access to it regarding this process. We've got about 20 seconds before we go to the break. You got another thought?
Yeah, I think when you're looking at and that's why you've got to be careful now with these buy now, pay later things that are going on. This phantom debt.
Oh, yeah.
I mean, it is bad. And these are the things that you've got to protect because sometimes you get down that rabbit hole, and how do you get out of it?
Yeah, let's talk about how that may be hurting people when we come back from the break. And another topic I want to cover before we leave this hour today is about regarding these all cash offers. This is Winning at Life. We'll be right back.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker. He has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
The program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify. And wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love your show.
Investment advisory services offered through AE Wealth Management LLC. The firm is not affiliated with the U.S. government or any governmental agency.
What does your ideal retirement look like? Is it traveling the world, fishing whenever you want, spending time with the grandkids, or maybe you don't know yet? Hi, I'm Gregory Ricks. Let us help you plan the retirement you deserve. Give us a call or go to GregoryRicks.com to schedule a visit. We are Gregory Ricks and Associates, the total wealth authority.
The firm provides insurance services, investment, and advisory services offered only by duly registered individuals through AE Wealth Management LLC. AE Wealth Management LLC and Gregory Ricks and Associates are not affiliated companies.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, You can listen to the show live, or you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
We are living in historic times, extraordinary times. A lot of people need help right now, and I want you to remember your local food bank. Now here in New Orleans, it's Second Harvest Food Bank. Over in Mobile, they've got Feeding the Gulf. But you can find your local food bank, feedingamerica.org. Food donations, monetary donations, or I know you've got some free time. Find your local food bank. Support your local food bank, especially in times like this. Do some good. feedingamerica.org.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you have a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
News, I'm Jack Callahan. A storm system in the Caribbean expected to strengthen into tropical storm Imelda tonight. It will pass close to the southeast coastline next week. Fox meteorologist Britta Merwin.
The cone right now does call for a Category 1 hurricane staying offshore, but even with that, we would have very heavy rainfall that could last for days for the Carolinas.
Hurricane Umberto has reached Category 4 strength. It's not expected to make a mainland U.S. landfall. President Trump says he'll send federal troops to Portland, Oregon to protect ICE agents and facilities from what he's called domestic terrorists. Acting ICE Director Todd Lyons.
You have people out there trying to impede law enforcement from doing their mission. That's all the men and women of ICE are doing. They're doing a law enforcement mission. And you have people out there actively calling for them to be shot. It's disgusting and vile, and we're not going to stand for it.
President says he'll expand deployments to more cities if necessary. America is listening to Fox News.
You're listening to Winning at Life, live financial news talk radio. Hey, hope you're enjoying this Saturday. I am as well. It's a beautiful weekend, and I love having conversations with Dwayne Stein. He's always fun to talk to on the show. So we're going to continue with Dwayne until top of the hour. And some good stuff here, but one of the things is helping you avoid problems. And when we went to break, we were talking about you got to get out of the cycle of carrying revolving debt. And this thing, you buy this pair of shoes online and they'll let you split it up into 3 payments. Well, you just picked up revolving debt, and I think that's kind of a scary thing. What are you seeing with that? It's just, I can't believe this is everywhere. And whenever I buy something, I see that offer up there. I'm like, why would I do that? I'm getting 0%. And I'm going to pay it off at the end of the month on my credit card.
It's ugly, Gregory. It's phantom debt. The thing that scares me the most about the buy now, pay later is they are about to start reporting it on credit bureaus, right? So
that was the question I was about to ask you. Is it reported? Yeah. So it has not been, but it's going to?
It will. Some of them will report. For instance, if you go online and you go to buy something that they offer a 12-month option for you, right? Like, hey, pay, $22 over the next 12 months. Well, that can report on a credit bureau when it's over a 12-month period. But what's happening now is the lenders have gotten smart because we look at bank statements. So if you've got, it doesn't need a report on a credit bureau. And this is the problem when you start looking into this, that's having an impact when you come to buying a home. It doesn't have to report on your credit bureau, but if your bank statement, for some reason we look at that when you're purchasing a home, and you've got 4 Klarners, 2 Affirms, right? And these others, well, and we look at your bank statements and we see that constantly coming out, well, we have no choice but to assume it is a loan. So now we have to count that in your ratios, which can have an effect. And what's concerning on this is we're starting to see delinquencies go up on this, right? Because they'll report the delinquencies on you now. And on average, it's usually $135 over 6 payments. So it's like, it's so, and I'm not trying to, I might not just not be cool, right? But I kind of grew up on, if you can't afford it, don't buy it. And if we're financing, and we've joked about this on your show when this came out months ago, where you can DoorDash, now you can buy now, pay later your DoorDash deliveries, right? But $135, if I've got to finance $135 over 6 payments, do I really need that? I want it, but do I need it? And it's obvious I can't afford it. But the folks that are using this, Gregory, or folks that have already done what? They've ran up all that credit card debt like you're talking about. So they're not using that credit card anymore to just pay gas, right, and pay it off every month. They're using that credit card debt to live off of. And I get it, times are tough. But now, to add insult to injury, we're now going out and using this stuff, this buy now, pay later, which again is phantom debt. And it's going to have an effect when this stuff goes live, when they get it worked through, how they want it reporting. Because they're all wanting to go public. All these companies, they're wanting to go public, but they're like, we don't think you should, we're trying to protect our consumers. Well, it's at some point we got to know what's really out there. $97.3 billion, Gregory, is expected to be what's reached in the spending market by the end of this year.
Wow. It's a lot.
It's dangerous. And it's just, it's kind of like the student loans, Gregory, for years we kept talking about on here. It was scary because they kept kicking the can down the road, telling people you might not have to pay it back. You might not this, you might not that. And then all of a sudden it comes due. And what happens? Student loan delinquencies through the roof. So it hurts your scores. And what I'm trying to do is I'm not trying to poo-poo on this stuff and be the bad guy and be a bad. What I'm trying to do is for educational purposes, for moms, dads, aunts, uncles, grandmas, grandpas listening, who maybe your kids are using this stuff, talk to them about it, because if they go buy that debt at $135 and it reports to your credit bureau, well, you're at your max limit. So that's immediately going to plummet your score, right? Because there's factors that go into the credit score. So those are the things that are, especially for young folks. They're not like you or I, Gregory, who's established credit over so many years. So if we carry a balance for a month or two, they're not going, oh, my gosh, right? But when you're brand new and you have a limited credit record or credit history, and all of a sudden you got 2 or 3 things that pop up, that's not a good thing. That's not a good thing, and it's going to affect scores, which is then going to hurt when it comes to, all right, well, why is my rate not lower? Why is that? And that's what stinks, because as rates are getting lower, we're seeing some of this stuff, and we've got to count it in their ratios.
So what we're talking about here is how you should set yourself up to take advantage of what's great about America and being able to own land, own a home. You can even buy more than one, and more than one piece of land, or more than an acre, or more than a lot. And it's going to grow in value over time. It is. Few exceptions, which are small, but most part going to go up in value, and you can borrow money to do so. And I love this phrase is date the rate, marry the home. Kind of, well, interest rates are high. Okay, I think that's temporary. What's temporary? They'll go down over the next few years. And what can you do? You can refinance. Oh, and you can still keep that property. You just reconnect it with a lower interest rate loan. And yet the equity, you're still building equity while redoing it to get a better interest rate option. that's what we're talking about, is an opportunity there, and not making dumb decisions like carrying too much revolving debt. Kind of said, well, I don't have much for a down payment. Well, Dwayne, you've got some creative ways to help them get into that. And they said, well, I hadn't paid off my college debt. It's kind of like going to, fundamentally, you shouldn't carry any debt, but let's say you've got debt. Okay, we're going to work that over time. But, well, should I put all my money to that? No, I think you've got to kind of do a combination of things. You've got to build emergency money. You got to start saving money for retirement, and you've got to pay off your debt. And honestly, if you try to do one or the other, you're hurting somewhere. You might spend the next 5-10 years to paying off that college debt and credit card debt, and you've not put money in your 401k. And what have you lost? A decade of compounding. Let's say you don't have debt, but I don't have emergency money. Well, you start building your emergency account, but you also start saving and investing for the future, because you can't get those years you lost from compounding. All that's kind of important. I know it may not be easy, but you got to work on all of them at the same time. Your thought?
Yeah, I think that's so important. And guess what? Even the folks who bought over the last 2-3 years, right, where the rates were a little bit elevated, you could go look at the numbers. Median home price is still going up. Is it going up like it did in 20 and 19 and 20 and half of 21 at 19%? No, but we're seeing gains. So that means when that neighbor is buying that house while they're waiting for rates to go down, you're already in there. That's where you're going to see the value of your investment, of your risk, right? We talk about it. It's your largest, most valuable asset. That's where you're going to start to see these things coming through to you and seeing the value there, right? I'm not getting appraisals, Gregory, on homes that people are buying, and they're coming in short, right? They're not. I'm getting many appraisals where the value's more than what some of these things are being sold for. So that gives you an idea of, when you're looking at this, of the benefits. But the thing I would say, going back to what you were talking about, risk and getting your debt and understanding, the biggest thing when I'm talking to clients is understanding what are their needs and goals. It's not just fill out this online app. It's what are your needs and goals. But as importantly, when we're doing that, is what are we looking at? What are we working towards, right? Because as a first-time home buyer, but that debt, let's try and figure out, how can we get you in this home? How can we manage through it, right? Let's get the seller to pay some of your closing costs. So maybe you could use some of those funds you had allocated for this. Let's go pay off that debt instead.
Let's talk about the secret to these all-cash offers for homes when we come back from the break for the last segment with the great Dwayne Stein. You're listening to Winning at Life on iHeartRadio. We'll be right back.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
I started my retirement about 5 years ago, and I truly am late in life.
Would I be better to just withdraw the money out of my TSP and pay that mortgage off?
My problem is I have champagne tasting of your salary. What is a balloon note?
Is that cutting it too close?
So will I still be eligible for Medicare?
Is there anything better I can do with the money I transferred into the Roth from my 401k? My goal is to retire at age 60. I'm 54 right now.
Hey, I have a 9-year-old son, and he's got probably $2,500 in. Is there anything we can invest it in?
I just started a 401k a little late in life.
The match should be like 10%.
Now, how far in advance do you recommend that someone goes to visit the Social Security office?
I won some money in a casino playing poker.
Gregory Ricks and Associates, 504-832-9200 or GregoryRicks.com. Investment advisory services offered through AE Wealth Management LLC.
Oh, Rover, you have fleas again? Prevent fleas and ticks from setting up shop in your backyard. Those bloodsuckers can bite up to 400 times a day and carry nasty diseases like typhus and tapeworms. Give Rover some relief and contact Mosquito Joe. Their mosquito control services also kill and prevent fleas and ticks. Let Mosquito Joe be your first line of defense against those blood-sucking pests. New Orleans.mosquitojoe.com. New Orleans.mosquitojoe.com.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I'm your host, Gregory Ricks, a financial advisor here to answer your questions and help you win with your money.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
That's exactly what I needed to know. Simple information from good people.
Investment advisory services offered through AE Wealth Management LLC.
The Ricks Report with Gregory Ricks.
At the core, I always tell people, I'm not here to make you rich. I'm here to make sure you don't run out of money, that you don't run out of income. That's how I look at my job. Over time, saving, making good decisions can make you rich. But what you have is, what is your core thing? Your core thing should be making money. And your core thing, you should set aside money to work elsewhere. It doesn't necessarily mean you have to put it to risk. You could put it to safety. But your core thing makes you money, or you tell me your core thing is the market, day trading, or gambling in the market. It shouldn't be. You should have a core thing that makes you money, and you peel some off for the future when you're done with your core.
Winning at Life with Gregory Ricks, Saturday mornings at 10 on News Talk 99.5 WRNO. Find us on the Winning at Life app or GregoryRicks.com. Investment advisory services offered through AE Wealth Management LLC.
This is Winning at Life. I'm your host, Gregory Ricks. Thanks for joining us on this Saturday morning. We have a few more minutes left here with Dwayne Stein. He's actually a host of his own awesome radio show, mortgagegumbo.com. I suggest you check it out. He's always entertaining to listen to and so much real information. Dwayne, we're going to talk about this article from Investopedia, saw here, and we've talked about it in the past, but there's kind of like one thing they're kind of giving here. The title of it is, How the Heck is Everyone Making All Cash Offers on Home? And they're basically saying, hey, we've got the secret. In fact, the National Association of Realtors reported that 32% of home sales in 2024 were cash offers, the highest since 2014. That's kind of crazy. Like, is that many people walking around with all this cash ready to buy homes? We know that's not the case. As mortgage rates remain high and competition for homes is fierce, all cash offers might be the way to go. And you and I have talked about this. This is kind of, you may be showing up with that, but you've done something different. And I'll give one other point, and I'll let you give a few thoughts. Why make an all-cash offer on a home? If you've ever been to an open house and seen the line snaking out the door, you know how challenging a competitive housing market can be. To get your offer accepted, you need to stand out differently. And a seller, when do they want their money for their house? Yesterday. So if you're ready to act fast or show up that way, that kind of moves you in front of a lot of other people. All cash offers signal that you're ready to close as soon as possible, and you have the funds to buy the home without financing, which can slow down the home buying process. And here's what they're throwing into the article is delayed financing. With delayed financing, a buyer can use their own cash to purchase the home before getting a traditional mortgage, or essentially reimbursing themselves for buying the home. In a sense, one of the things you put it as, you're getting pre-qualified. You should walk in the door pre-approved. Yep. Your guy Dwayne's already told you, says, look, I can get you done in days at this point with what we have, and you're good up to $575,000, subject to appraisal, and you might have a little wiggle room from there. Share with the listeners how this works.
Yeah, I think that's what you're stating there is a great article. And look, here's existing home sale numbers in August that just came out this week. The percentage of cash buyers was 28% in August. The percentage of first-time home buyers that bought existing homes in August was 28%. So that article is somewhat right. Here's the thing. You have to understand, listeners, is this. You've got to be pre-approved. There is competition. We're seeing right now the same percentage of first-time home buyers is what are cash buyers. Now, a lot of these cash buyers maybe are going to the bank of mom and dad. Maybe they are buying again after they sold their house. They've rented for a couple years. They made money off of 20 and 21 big sales, right? And they're coming in and they're able to pay cash. But what you have to do is, the key is to be pre-approved. You've got to be prepared. So many people call me after the fact and go, yeah, I'm thinking about buying. I lost out. I went and looked at houses last weekend and made offers, and they didn't accept our offer. Well, because you're not pre-approved. You're not going window shopping when it comes to buying a home. So you've got to make sure that you've got your finances in order. And you got to keep in mind, too, cash. Think about when you go to the gas station. You'll see up there cash is cheaper than it is if you use credit. Well, a lot of folks, when they are trying to buy cash, they're trying to pay a little bit less. So that the way we win is and beat cash buyers is we have a true pre-approval that we're able to tell them, hey, we could still close in 15 or 20 days and still get you money. And chances are ours is getting accepted because we are willing to give you more than what that cash buyer is giving you. So there's different things. So you've got to be able to go up against this. But, yeah, a lot of folks have their money right now. Maybe they're not in the market. It's crazy. I think it's, $7 trillion is sitting on the sideline right now. Well, this is people who are sitting on this money. And I think, Gregory, you're going to continue to see this competition because what's happening, what folks have to understand, the Fed, what does Powell and the Fed affect? Overnight bank rates, what banks lend to banks. Well, these money markets that everybody got and these CDs that they took for 2 years is coming to expire that they were getting 6% at. Well, now that's going to be a lot less. So people are going to look to do some stuff with their money. So that's why, as somebody who doesn't have the ability to go, hey, and dump a bag of cash on a desk for someone to purchase, you've got to make sure that you're prepared so you can make that quality offer so you can compete with that. And keep in mind, some of this cash stuff, too, Gregory, is for second homes. They don't break it down like first home, right? So some of that falls into investors and all that as well.
Let's jump to the phones. We've got Scott from Biloxi joining Winning at Life. Hey, Scott, how you been?
Doing good. So I guess I thought of another question while y'all was talking about housing, but my first question was, what kind of fee should a person look to pay? I mean, I'm getting real close to retirement, just kind of throwing that out there to make sure I'm not getting robbed. And then number two, since y'all were talking about housing, I currently have a house I was thinking about downsizing. But I got in on this house at a really good interest rate, like 2.5, and I'm just kind of debating whether I should keep this house and wait a little while, or what. Since I am downsizing, obviously I'm going to have to turn around and purchase something else at a higher rate. So,
yeah. The thing I'll mention to you at a fee, everybody's situation is different. All firms kind of handle that differently. And for a long time, we had one specific fee. And after a lot of thinking about that, we made adjustments on that. And I think it's really fair, but it's also with efficiency. And I'll tell you, it basically starts with a higher fee from a conversation standpoint. But what impacts the fee is the more assets we have to work with, the fee lowers. Everybody's situation is differently, but we also are a family firm. So through the family, there could be more assets, say the parents, the kids, other relatives, we give credit for that, which lowers the fees as well. And then it's all the different services that we bring add so much value for that. And a lot of things we do have underlying costs that impact us, but like direct indexing, which is a phenomenal tax strategy. And there is a cost to those things, but one thing about it, Scott, it is fully disclosed. And we do have that on that fit visit with the conversation. It's not a number I can just put out on air because everybody's situation is different from a asset size standpoint. And Dwayne, did you pick up on his question? You can go ahead and address that with our last 2 minutes.
Yeah, I think for Scott, I mean, you're sitting like a lot of people, right? You've got that locked in effect, right? You secured this home that you got, refinanced it, whatever, in your mid-2s, but you're now ready to downsize. So what do? There's a couple things, and we do this quite a bit. I mean, it depends on if you're about to retire at this stage in your life or you wanting to have mailbox money, then you keep that 2.5% mortgage that you're currently in. You look at buying the new home, and you have a income stream coming in from that. Or do you sell that house? Yeah, you're going to give up that rate, but when you're looking at it, hey, we're going to put you in a new home. You're going to use that cash from that sale, and let's look at, hey, amortize out. When do you want to have this paid? When do we want to be out of it? But if you're doing this in 3 years or in a year, that's going to be a different conversation that we're going to be having depending on. But making sure, most importantly, Scott, is that it lines up with your retirement goals. We're not just throwing something out there. It's, hey, here's what my plan is. So then we go, let's look at this and see how we want to do it. And I think a lot of folks are sitting in your situation where they're locked into that low rate, yet they're kind of ready to move and downsize. What do we want to do here? And need to understand that could be an income stream for you. But now all of a sudden you're a landlord too. And do you want that hassle? So what do you want to work with? That's where we have a nice conversation to find out what your goals are. And then we prepare some options based on that. But, hey, it's a good situation. Retiring, have a house with 2.5% interest rate, I think you mentioned. So that's a good problem to have, and we could chat through some different options for you, no doubt about it.
Scott, I got 10 seconds. Any other question, thought?
No, sir. I appreciate y'all's time.
Okay. Thank you for listening. Scott at dial 504-260-0995. Dwayne, thank you for joining us today as well. It has been awesome, brother. We'll
Always
see
a pleasure,
you
my man.
soon. You're listening to Winning at Life with Gregory Ricks. We're going to take a short break, and we'll be back with Hour 2.
News Talk 99.5 WRNO-FM, New Orleans, comes from the Mortgage Gumbo Studios.
Your locally trusted home loan lender, MortgageGumbo.com.
Storm alert set for the southeast coast. I'm Jack Callahan, Fox News. As a looming storm system is on its way to becoming Hurricane Imelda. Fox Weather's Britta Merwin with the latest.
Across the nation today looks pretty good. We got some sunshine to talk about, especially across the northern tier. Kansas City, 87 degrees, so a little bit of heat across the nation's midsection. Meanwhile, on the East Coast, we got a lot of rain, and a lot of that is going to get extremely complicated. Big story here on Fox Weather. We have a potential tropical cyclone number 9. This is eventually going to become Hurricane Imelda. We're watching it over the next several days. The problem is there's a lot of model discrepancies, so a few solutions here.
The threat of a hurricane prompting a state of emergency declaration in South Carolina. The southeast coast is preparing for flooding impacts, even if the storm does not make a direct landfall. President Trump predicting there will be others after the indictment of former FBI Director James Comey. As Fox's Chanley Painter reports.
President Trump is standing by his Justice Department after former FBI Director James Comey was indicted on charges of making a false statement and obstruction related to his testimony before the Senate Judiciary Committee in 2020.
The next person on your list in this retribution?
It's not a list, but I think there'll be others. I mean, they're corrupt.
These were corrupt, radical left Democrats. It's about justice, really. It's not revenge. It's also about the fact that you can't let this go on. They are sick, radical left people, and they can't get away with it.
Trump also telling reporters that Democrats, quote, weaponized the Justice Department like nobody in history, claiming they went after him unjustly.
Attorney General Bondi says people need to be held accountable, telling Fox's Hannity they're investigating all the weaponization, all the wrongdoing that has happened, and they are issuing subpoenas. America is listening to Fox News.
Hey, y'all. Yeah, we're back. Winning at Life. I'm your host, Gregory Ricks. We've been bringing this show to you for about more than 15 years. Can you believe that? Man, I still go back to kind of remember when they asked me to do a live radio show, take calls, and I'm like, what? Take calls on the air? Answer questions? I didn't realize that's what I do all day, every day in meetings with families, individuals, couples, clients. Is they don't send me the questions ahead of time. We're in a meeting and they're like firing off questions, and we work through them, answer them, and if we can't, we get back to it as well. And live radio is, I don't know what question is coming. Just recently we had Scott call in last hour regarding fees, and then he had a mortgage question as well. So didn't know, but we do a great job at helping them. And once again, on that situation, like for Scott, if you want more, it's real easy. Call the office, 504-832-9200. It doesn't mean you have to have a meeting or be obligated. And in some situations, we set up a 15-minute follow-up call or callback where the advisor is going to have on his calendar 15 minutes blocked to follow up with you, help you out, answer some questions. And if you are wanting to come in for an in-person discussion or schedule a Zoom meeting for more time, we can get that all handled for you through that process. But a 15-minute call doesn't obligate you to anything. Just like if you schedule a visit to come into the firm, it doesn't obligate you to do anything. And I'll tell you, they start, just so you know, we start all visits with an agenda. Whether it's a 15-minute call, your first meeting, or annual strategy meeting. And part of that agenda states how long we have scheduled for this meeting. I know some people say, well, I'm going to talk to an advisor. They're really salespeople, and I'm never getting out of there without moving my money. You know, it's the same mentality of going to a car dealer. Like, you know why people go to car dealers after hours and on weekends? Because they don't get bothered. There's nobody there to make them buy a car. Like, oh my God, I'm never getting out of here. Have you done the car deal before? You're there for hours. I'm like, oh my gosh, how unbelievable is that? And I don't want you having that feeling at Gregory Ricks and Associates. So if you do come in for a visit, it's scheduled for 60 minutes tops. And if you're done earlier or you have less time, let the advisor know. But we're not keeping you more than 60 minutes. We have other meetings lined up. You're not the only visit for the day. I promise you that. We're like a restaurant that's busy. We're a busy place where business is being done, where people are being helped, and we're managing money. We're solving problems, answering questions. Just like Jude Heath is over at J. Heath and Company CPAs, and he's our guest this hour. So once again, if you kind of like what I said about the firm, want to look into us, it's gregoryricks.com, email info@gregoryricks.com. The office number is 504-832-9200. And Jude Heath works with a great deal of our clients as well. And he, I can't say I like all accountants, but I love J. Heath and Company. I love Jude. He's great, and we've been working together for years on the show. So, we'll start off with how do people reach you, Jude?
So our website is jheathcpa.com. You can call Gregory's office, or my number is 504-832-1873.
Or you can just reach my office and we'll hook you up as well. Some people, to me, oh my gosh, that was a lot of numbers all of a sudden as well. So we've got you here for almost an hour today. I've got a few topics, but you came through the door with something that really surprised me, and you probably have some other thoughts to share, but there is change about in how the IRS operates. And one of the things I've enjoyed since you taught me to do this, because, I don't like this quarterly filing thing. And I was bad at it for years. And then I would end up owing money. And sometimes that still happens when all of a sudden you made more money than you thought. Well, I missed an adjustment there, so I got to send them some more money. That can happen, but what's cool, I don't like the quarterly. I like the monthly, because that ain't my money. If I owe it to you, it's not my money. So I've got to get that off of my balance sheet, is the way I look at it. And that's something years ago I learned from you to send it every month, because I don't like holding it for a quarter. That's like, if I see it on my balance sheet, because I like it more simplified. I like a cash report. I like to see where I'm standing. You kind of know my thing about, how I do a weekly cash report at looking at my balances on my different businesses and accounts and personal. It tells me where I stand. Well, if I got money sitting in there that's not mine, and say it's several months worth of somebody else's money, like the government, that's kind of misleading there. So explain to them what we're doing, and then I'm going to let you break the news of what's possibly coming or is.
So what I had recommended to Gregory years ago, and we recommend to all of our clients, is establish an EFTPS.gov account. That stands for Electronic Funds Transfer Taxpayer Payment System. So what that does, it's your own little account that's linked to your checking account that you can make as many payments as you want. Like Gregory says, he likes to pay monthly. He looks at his monthly cash flow. He sees what he needs to pay. He gets the money out of his account, so that most business owners want to know, what's mine? What can I keep? I know I have my expenses. I know I have to pay my taxes. What's left over for us? Point is, these EFTPS.gov accounts, the IRS is starting to hint or release that they're going to limit the number of these accounts. So first of all, my first encouragement is, if you don't have one of these, go get one before they limit them. What they'll do is, you go to EFTPS.gov, you sign up, they will send you a PIN in the mail, and you tell them your checking account, routing and account number, and you just test one out and just see it go through. I think one of the things that Gregory and I like about it so much is it keeps a running tab of your tax payments throughout the year. So when tax time comes, you just print out your tax payments, and that part of your tax return preparation is finished. So in addition to that, everyone knows, it was widely publicized that President Trump issued executive order over the summer that he's going to eliminate checks coming in and out of not just the IRS, but the government, but for me, the IRS. So the IRS announced this week that they're phasing in their first aspect of that, which is no more paper tax refund checks. So I've been talking to my clients as that presidential executive order came into effect, as to how to plan for that. Because some people, they don't like to give the government their checking account. Truth is, every time you write a check to the government, they keep that. They have your checking account number. Trust me, they know when you've changed your bank. They are a collection agency, and so their job is to keep.
Kind of interesting way to refer to them. They're a collection agency. Yeah, they want their money and they're going to get it.
Their job is to keep evidence to collect. And so point is that they are moving towards what's called direct pay. And what I don't like about direct pay is you can't keep your history. You have to keep it offline, off of the IRS's site. And there's also an identity theft verification in there. And truth be told, I think that's the reason why they're limiting the EFTPS accounts, is because if somebody gets a hold of your login information, and if they file first and take the money overseas, the Treasury loses the money. You're going to get your money because you're going to be able to prove, look, I paid this amount, and it might take 6 months to a year, but you'll get your money that you paid in your taxes. But the government, our government, we the people, lose that money. And I think that might be the reason, but they haven't announced why. They just said they're going to at some point cap the number of EFTPS accounts. So my emphasis this morning is, if you don't have an EFTPS account and you go look at it and see that it's something that you like, and I highly encourage it, go get an account before they limit those.
So I guess it's good that you could still send them their money every month. They're just not keeping a portal where you see everything that's going on. Now, my cash report started out real simple, just like the idea. I got it from Jerry Jones a long time ago, right after he bought the Dallas Cowboys. He pulled out, remember one interview I saw him, he pulled out a little piece of paper out of his inside pocket on his suit jacket, and it had where he stood, and he says, yeah, I actually, and I think he got it more often than once a week, but he always knew where he stood since he bought the Cowboys, because the way he's looking at it, one day I need to get my money back, built back up, that I paid out for that team. I think he's done okay on that deal. It just, it's like real estate. It just keeps going up in value. I look at it from a standpoint, that is a fundamental part of my cash report, but there's a lot of other stuff to drill down on, and there's another section in my cash report if I want. So that what I like is that cash report shows up first, but I can scroll and look or open it up and see other things, which one of them is where I'm at on taxes for the year. How much income have I taken in? What am I showing as profit at this point in the year? And what have I paid in taxes? So I'm keeping up with those payments anyhow, and I really never paid attention to what the IRS site, plus I have somebody do that for me as well. So, well, hey, we're going to talk about that even more when we come back from the break, and we've got the great Jude Heath here, and we're going to take a short break and be right back. This is Winning at Life on iHeartRadio.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
Could this be your Social Security, your 401k, pension, lump sum, your debt, student debt, credit cards?
You all are so good. I've listened to you for years. Sometimes I'll pull over to the side of the road and just listen.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify. Investment advisory services offered through AE Wealth Management LLC.
Gumbo Nation, you did it again. Thank you. 10 plus years on air, Mortgage Gumbo Dadcam has grown because of your trust in me as your local preferred lender with all your home loan needs. My recent recognition as a national top lender is awesome, but being your local lender is what matters to me and why I'm so thankful. I promise to continue to earn your trust.
On RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Less than half of Americans have drawn up a will. If you don't have one, you know you need to get one. But what if you do have a will? Is it up to date? Has anyone in your family been married, divorced, or passed away? Have any new family members been born or adopted? Don't leave your loved ones in a bind. Call me and we'll make you a plan or update your existing plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
If you do not have money set aside, you do not have retirement assets, you don't have significant savings, you're thinking, well, when should I turn on Social Security? I'll answer that for you right now. You should probably work as long as you possibly can and as much as you can, because that means you defer Social Security as long as you can up to age 70. And you can keep working past that, that's fine. But at age 70, you have to turn it on because you've maximized it there. And you've created the largest possible payment, and you're going to need all of that.
Winning at Life with Gregory Ricks, Saturday mornings at 10 on News Talk 99.5 WRNO. Find us on the Winning at Life app or GregoryRicks.com. Investment advisory services offered through AEW Wealth Management LLC.
This is Winning at Life, the Saturday go-to radio show. Yeah, been bringing it to you for over 15 years. Thank you for listening. I appreciate the feedback. I want feedback, your thoughts, and especially the stuff you like. I'm not so interested in the stuff you don't like, but I'm good with feedback, even critical feedback. The email is info@gregoryricks.com. The office number is 504-832-9200. And go check out the website. And another thing I think is important on the website, our process and how it works is there. It's a great place to dig in a little bit. And the news blog has a lot of great articles, and Jude and I was speaking on the break about, different books and stuff, and he was naming off a few of them. One of them is The Latte Factor by David Bach, and a great book, great small book. Sometimes, I was talking with the team yesterday about gaining knowledge and always reading, and I am always reading daily. Probably spend about a good hour every day on reading, and I started that in high school, so it's just if you're not growing, you're dying. That's a business concept, but it's a personal concept as well. And you mentioned another book here I've got from Ed Slott, The Retirement Savings Time Bomb Ticks Louder. Now, that's a serious read. That's a deep dive right there. But it is great stuff as well. And another great one is The Psychology of Money. If you're looking for ladies, Smart Women Finish Rich. Oh, a health book, Glucose Revolution. Okay. And I've got another. This is a new one here, and this is regarding AI. And yeah, we're putting efforts into that. I'm still growing and learning on utilizing AI and prompts. And a few weeks ago, I was basically in a 4-hour training session with this guy that wrote this book that I'm showing Jude. I'm gonna put it on the camera for the show. But I know Jeff Woods well, and we've had dinner and wine together a couple times. But this guy, to be in one of his sessions, and I didn't have to pay this, But to have typically his 2-day trainings cost $25,000 a head there. And another firm he was part owners of and sold out his interest a few years back, but we paid that firm considerable fee to coach us up on a lot of systems. But this book, #1 international bestseller, and the title of it is The AI-Driven Leader. From a personal standpoint, from a business standpoint, you might want to look at this. I always have Google, like what is that? Or, asking a question. It was a real simple thing. But AI can do so much, but it's not as simple as asking it a question. That is not it. And when we talk about prompts, it's how you ask AI to help, and I'll define it, Jude, as 4 ways. It's the context, the role. You want AI to interview you, and then tasks as well. It's kind of 4 parts of that, but this is a good book, The AI-Driven Leader. And even on my laptop, I've got 2 yellow tabs there, and one of them says, how can AI help me do this? Just a question. How can it help me? How can it help me be better? I don't need it as a crutch, but I need it to help. And then there's 4 parts of that: context, role, interview, and task. And hey, it's not something I figured out. It's Jeff, one of my coaches, does that. So what else you want to know, Jude? See, that's a great question you brought up on the break there, and the public kind of got to hear a little bit of that. But Jude brought it up because his team of people, they always kind of have a library of books to give out and such. And another book is Cues, C-U-E-S, and that's kind of, I'll define it, it's simply about dealing with people there. And we all need to be better at that, especially when you I'm uncomfortable. I'm awkward around people. I hate crowds and all those human things. And she'll help you be better at all of that. So I think that is a great read, and I'm going through it for my 3rd time right now. So sometimes I read books multiple times. Okay, let's get back to the IRS and our money. So did we tidy that up? Is that new system in place, and you feel the other one's going to go away?
Yes, direct pay has been in place. I have read that they're going to start limiting the number of EFTPS accounts. They did not say they're going to eliminate them. They said they're going to limit the number. And so I think it's superior, and I just asked the radio show to, if you want one, go get one before they start limiting the numbers. But direct pay works too. You do have to keep your substantiation, but like Gregory says, as business owners or payers of tax money, we keep our substantiation anyway. So yeah, I think we've put that to bed.
What topic do you have top of mind there that you're seeing going on? Because one of the things I teased earlier before you came on is we're coming up on the last quarter of the year. I had a conversation recently with a tax firm, and they had a client that had pretty big year and owed a lot of money, and they were looking for strategies, and this was on 2024. Well, heck, we're in September of 2025. There's nothing we can do about 2024. at this time. But with that said, it's to plan before your tax year's over with. And so I just want to talk with you a little bit about that and some strategies. And I've got an article I want to reference another topic with you all. So let's talk about this last quarter. And I don't know, did that statement sound inaccurate that I gave you? You know, when they're calling me of like, what can we do about that? Well, heck, we're at the latest filing point. You got to have it all said and done on October 15th is your last day.
Right. So we call that mining for deductions. Usually mining for deductions for clients is not cost beneficial. Usually, by the time we take our process, we go through it, we add everything up. They pretty much spent most of their money on personal stuff. It's not anything business related whatsoever, and so we don't really come up with too much extra to deduct. And I had a conversation with a real estate agent out of town that he's on extension, and what can we do? And I said, well, don't hand me a shoebox full of receipts. To take a little bit of ownership in
They
that.
still do that?
Well, on the computer, and to take a little bit of ownership in that, and let's be proactive. I understand you have to file 24, but it's the end of 2025. Put something in place. It's your money. Put something in place, and let's figure out a way. And one of the ways that we've been rolling out, and it's been affected a little bit by the One Big Beautiful Bill, but I'll explain the difference. So the SALT cap prior to One Big Beautiful Bill, state and local tax deduction on Schedule A, itemized deduction, was $10,000. And the coast states were furious about it, so it went to 40, and that's fine. But prior to it going to 40, most of the states had enacted a pass-through entity tax exclusion, where if you have a pass-through entity, a partnership or an S-corp, you can pay the taxes at the entity level to take the deduction, and then you get a pass-through entity income deduction from the state. And so we've been slowly looking at our clients through the years where it makes absolute sense. We have put that election in place, and you can elect out of it when it no longer makes sense. And we're coming to a break, and so I'm going to pick it up when we get back.
Okay, awesome. Thanks for leading us to the break. This is Winning at Life with Gregory Ricks. You're listening to us on iHeartRadio, and we'll be back with more here shortly.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker. He has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
Your program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify, and wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love your show.
Investment advisory services offered through AE Wealth Management LLC. The firm is not affiliated with the U.S. government or any governmental agency.
What does your ideal retirement look like? Is it traveling the world, fishing whenever you want, spending time with the grandkids, or maybe you don't know yet? Hi, I'm Gregory Ricks. Let us help you plan the retirement you deserve. Give us a call or go to GregoryRicks.com to schedule a visit. We are Gregory Ricks and Associates, the total wealth authority.
The firm provides insurance services, investment, and advisory services offered only by duly registered individuals through AE Wealth Management LLC. AE Wealth Management LLC and Gregory Ricks and Associates are not affiliated companies.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live, or you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
We are living in historic times, extraordinary times. A lot of people need help right now, and I want you to remember your local food bank. Now here in New Orleans, it's Second Harvest Food Bank. Over in Mobile, they've got Feeding the Gulf. But you can find your local food bank, feedingamerica.org. Food donations, monetary donations, or I know you've got some free time. Find your local food bank. Support your local food bank, especially in times like this. Do some good. feedingamerica.org.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you have a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
Wish your life came with a warning app?
That dog does not want to be petted.
Well, life doesn't always give you time to change the outcome, but prediabetes does. Take the 1-minute test today at doihaveprediabetes.org. Brought to you by the Ad Council and its prediabetes awareness partners.
News, I'm Paul Stevens. A looming storm system is on its way to becoming the future Hurricane Melda, possibly affecting the southeastern U.S.
This is potential tropical cyclone number 9. There is going to be an impact to the U.S. most likely, even if it's fringe impacts. The challenging thing is our computer models are completely divided, and we're not going to have clarity until we get farther into this weekend.
Fox Weather's Britta Merwin. Anti-ice protests continue across the U.S. Acting Ice Director Todd Lyons commenting on Fox and Friends weekend.
You have people out there trying to impede law enforcement from doing their mission. That's all the men and women of ICE are doing. They're doing a law enforcement mission. And you have people out there actively calling for them to be shot. It's disgusting and vile, and we're not going to stand for it.
A shooting at a Dallas ICE facility this past Wednesday morning led to 2 deaths and 2 injuries. America's listening to Fox News.
This is Winning at Life. I'm your host, Gregory Ricks. This is our tax hour today. And we have Jude Heath of J. Heath and Company CPAs. And I've worked with him for a long time. Our firm has, and just always brings great knowledge. So, I never, one of these hours, we're going to have to do one kind of stump Jude. You know, can we puzzle him on something? Because I have conversations all the time, and he's like, well, I don't know anything about that. He knows about it all, it seems. And he's an avid learner like me, so that's awesome. In the last segment, we talked a few minutes about books. But right now, when we went to break, you were wanting to finish up a thought, so retrace that, and then I got a couple things I want to ask you about.
Yeah, so to back up a little bit, I was mapping out a pass-through entity tax deduction with most of the states. I think only 2 or 3 states don't have it, but we have it in Louisiana. And you pay your taxes that are generated by the pass-through entity, the S Corp or the partnership, at the entity level, and take a federal tax deduction on that. You get a credit filing in the state, so you don't pay tax twice. So even though we got a bump up in the state and local tax deduction with the One Big Beautiful Bill, I still think this makes financial sense for most people. And so we're still encouraging it. We look at each individual case and we talk about, the savings you can expect. And, from our standpoint, assembling all the paperwork for you to file, how much it'll cost. The time to do it is now, before the end of the year, for this current year. And like I said, if ever it proves that it's not beneficial, you can always elect out of it. So just as a general rule, just write that down and check into it. It's the pass-through entity tax election for the state. In our case, Louisiana and Mississippi both have those.
Going back to a question, I had a conversation not long ago with a firm was reaching out that they have a client that had quite a bit of money and were looking for some tax strategies. And they wanted a conversation with me of how we can help. They're all show listeners and such, and know and understand that we really bring it on help. And I basically shared what I don't have any fixes for you right now at this point, but what I gave them, Jude, is a few ideas here. And that situation was a high net worth client, and this doesn't necessarily mean you've got to be worth $3 million or more in assets, but those that have those amount of assets kind of has their own unique problems as well. And then somebody worth 500,000, well, that I don't care. That's a good problem to have. I'd like to have those type of problems. I could see that as well. But one of the things we all, at all of our levels that we're at, we want more efficiency. I'd like to pay always less in taxes. We'd always want to get more value for our money. And I think working with professionals has its advantages. Like, what is, and I'll throw this, maybe it's the challenges of why somebody should use your firm versus some software and doing it themselves. I couldn't imagine doing it myself. Have I done that? Yeah, long time ago. But I wouldn't even consider it at this time. But what I kind of designed and had that conversation with, I kind of have a subject basically was high net worth opportunities. For high net worth clients, here I'm just going to give you a quick list of strategies, and I've got a whole manual here with about 20 strategies indexed. And a friend of mine taught me years ago, he said, look, I can teach you, and he did 100 strategies there. But in speaking to a client is, yeah, I've got 100 strategies, but all you really need is 1, 2, or 3 into the mix. And most of the cases, it's one that is right for you in your situation. But speaking here, the first is direct indexing with active tax loss harvesting. And that's where we can set a budget on each year. A client is okay to realize within their current bracket, actively tax loss harvesting throughout the year with a goal of additional tax alpha, all while looking to replicate performance of an index like the S&P 500. So when they talk about that, they're talking about harvesting losses to offset your capital gains on an active basis, and we even show quarterly the progress that's being made on that. Another is concentrated stock strategies. If there's a large amount of assets in a single security, there's no need to sell and realize capital gains. We can put protections or income generation options in place to gain additional income without selling the position, protecting the position from downturns, or both. There's 2. And 3, charitable remainder uni-trust. You're familiar with that. How can we donate stock, cash, real estate assets to a CRUT? Once in the trust, assets could be sold and income sent back out to the client, with only the distribution being taxable, not the entire sale amount. There's more to it there, but that's kind of just giving you a little bit of information for the public. And that's complicated as well, Jude. Qualified charitable distributions, QCDs, a great strategy that a lot of people aren't aware of that they can get help with, but it helps many clients. We help many clients with QCDs, allowing them to have less taxable income from high RMDs by donating RMD amounts and using the rest of their tax bracket for other needs like Roth conversions, distributions, life insurance, etc. Indexed universal life. Many high net worth clients utilize life insurance vehicles as investment and income producing assets. You can get tax deferred growth and tax free distributions on policy loans from cash value inside the policy, as well as protection from market risk. There's a neat thing about life insurance. It pays a death benefit. And is that death benefit taxable?
No.
No. It can fix a lot of stuff later in life. And there's a tool for it where some people, when they're young, they're kind of like, yeah, get tax deductions on a portfolio if we need additional tax strategies allowing other assets more freedom to invest and deploy in other ways. These are things people can start working on now to help with the rest of the year. This isn't stuff we can help you with on last year's income. And that was kind of my discussion, is what they need to do is have a sit down with us and see how this may help. And it's just like selling a business. Don't come to me after you wrote the contract and agreement to sell. They're structuring that, probably a number of strategies that can be put in place on selling that business and reducing taxes and spread it out over time. Right, Jude?
Right.
Anything else you want to add? I just thought this was a quick list. I got a binder of 30 more, and we could discuss 100 strategies, but we're wasting our time on 90% of them because they don't apply to everybody. Just let you know, we do have all these tools in our shed to utilize. We just don't need them all. It's just which one helps you.
So back to your first question that you led this off with is, why would someone use a professional like you or I? And that you've answered your own question, is you don't know the questions to ask Google to see whether this list of 100 applies to you or not, and you get bogged down in the mire. The second thing is, let's just say you Google this, you think it's a great idea, you put it in place, and you make a mistake and the IRS sends you a notice. What do you do there? How do you fix it? How do you ask for more time? How do you convince the IRS that you weren't trying to be fraudulent, whatever the case may be? And so those are all reasons to come to professionals to get your taxes and your financial planning done when the need arises.
You know, and remind me when we come back about ideas that are not viable for you to utilize. This is really important. We're going to take that break. We'll be right back with more Winning at Life.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
I started my retirement about 5 years ago, and I truly am late in life.
Would I be better to just withdraw the money out of my GSP and pay that mortgage off?
My problem is I have champagne tasting of your salary. What is a balloon note?
Is that cutting it too close?
So will I still be eligible for Medicare?
Is there anything better I can do with the money I transferred into the Roth from my 401k? My goal is to retire at age 60. I'm 54 right now.
Hey, I have a 9-year-old son, and he's got probably $2,500 in. Is there anything we can invest it in?
And I just started a 401k a little late in life.
Then that should be like 10%.
Now, how far in advance do you recommend that someone goes to visit the Social Security office?
I want some money in a casino playing poker.
Gregory Ricks and Associates, 504-832-9200 or gregoryricksandassociates.com. Investment advisory services offered through AE Wealth Management LLC.
Oh, Rover, you have fleas again? Prevent fleas and ticks from setting up shop in your backyard. Those bloodsuckers can bite up to 400 times a day and carry nasty diseases like typhus and tapeworms. Give Rover some relief and contact Mosquito Joe. Their mosquito control services also kill and prevent fleas and ticks. Let Mosquito Joe be your first line of defense against those blood-sucking pests. NewOrleans.MosquitoJoe.com. NewOrleans.MosquitoJoe.com.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I'm your host, Gregory Ricks, a financial advisor here to answer your questions and help you win with your money.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
That's exactly what I needed to know. Simple information from good people.
Investment advisory services offered through AE Wealth Management LLC.
The Ricks Report with Gregory Ricks.
At the core, I always tell people, I'm not here to make you rich. I'm here to make sure you don't run out of money, that you don't run out of income. That's how I look at my job. Over time, saving, making good decisions can make you rich. But what you have is, what is your core thing? Your core thing should be making money. And your core thing, you should set aside money to work elsewhere. It doesn't necessarily mean you have to put it to risk. You could put it to safety. But your core thing makes you money, or you tell me your core thing is the market, day trading, or gambling in the market. It shouldn't be. You should have a core thing that makes you money, and you peel some off for the future when you're done with your core.
Winning at Life with Gregory Ricks, Saturday mornings at 10 on News Talk 99.5 WRNO. Find us on the Winning at Life app or GregoryRicks.com. Investment advisory services offered through AE Wealth Management LLC.
All right, this is it. Last segment here with Jude Heath. Man, it's been great having you here today, but I appreciate that feedback on what I covered with you the last segment. Is all these different things that can be utilized, and using a professional, and that's kind of said, why use us? And you on the break said, well, yeah, you solved that right there. Why? How could you do that on your own or have the resources? And even speaking with people, depending on situations, we have teams behind the scenes that you don't see that we bring to bear because of our positioning in the marketplace, our resources that we can bring team of people. And I can even define it. I can bring in a high net worth team. I can bring in a team for specializes in tax strategies. But this is also, I'll give you a warning to be careful with schemes and ideas that maybe it sounds real good and they talk the talk, but you need to be careful also that it don't come back to bite you later, or the IRS rejects that idea. And we see people get taken advantage of as well. So, basically, we do act in your best interest at all times, and we are oversighted because we are under the SEC as well. So, and we work with other professionals as well, and we're licensed up also, and we're always studying. So that's one reason to use the right professionals as well also. I've got a couple things here. Let's see, which one do I bounce off of here? Let's see. That retirement number. Let's see, 7 things here. Let's try this. 7 things, well, you should own in retirement. I'm going to cover that a little bit later. Got a Barron's article here. Oh, here it is. Here are things you can do this year to trim your tax bill next year. It's a Barron's article here that was put out recently, and we can talk a little bit about that. It's a pretty good read, but one of them they gift here, gift with a qualified charitable distribution. Your thought on that?
Sure, you brought that up. It's a great way to gift your RMD, and lots of clients use it. And if you got a charity that is your favorite, it's a great way to bunch up your charity, and it's not deductible, but it's not taxable either, and so it's a nice thing.
Yeah, is that the above or below the line?
No, if you think of IRA, or
it's not. Now, gifting a charitable distribution doesn't go on your 1040.
That's correct.
Okay. Now, another thought they give here is bunch tax-deductible gifts into 2025.
So that's been around a while. Basically, it's if you're going to give in 2024 or 2025 and 2026, pick a year and give at the same time. So if you would give $10,000 a year, I'll just make it even better, $20,000 a year to your church, give $40,000 one year and nothing. There's nothing the next year. And that bunching up those deductions, you get more bang for your buck in the year of the gift.
Hey, this is a good one. Avoid big mutual fund year-end gains payout.
I read that, and I'm not so sure that getting that payout isn't. But I'm always one that, well, if you want to save on your taxes, just pay me $10,000 for your fees. No, just joking. But the reality is that you shouldn't try to jump over. Always be looking for savings too, not just tax savings. And I read that Barron's article, and I kind of was thinking I might rather have the distribution and pay a little bit of tax rather than opt out of the distribution, which is the direction they were going in. Like they said, as soon as the distribution is announced, hurry up and get out of the mutual fund before you get your distribution. Well, the way mutual funds work, those distributions have been accumulating all year. You've been sitting on maybe a flat line for that mutual fund all year, waiting on that gain. I don't know. I didn't really agree with that.
Well, here's what I'll do to counter that. Direct indexing, where you're doing tax loss harvesting throughout the year to offset those gains, might be the better way to do that other than getting hit with that taxable distribution. You could have been offsetting that strategy through the year. And I'll give you a definition here from an article over at Wealth Advisor. So what is direct indexing? Instead of buying into a mutual fund or ETF that holds a bundle of stocks, direct indexing lets your client own individual stocks that make up a chosen index. This shift unlocks the powerful benefits of greater tax efficiency, enhanced customization, and more transparency. It gives you the ability to tailor portfolios in ways that aren't possible with pooled investments there. So something to think about as well. And then let's hit this real quick, firing off stuff at the master here. 6 legal ways to avoid taxes on required minimum distributions. And that might not have been technically right to say the master, but you're good at what you do. But more important, you are a CPA that runs a large firm. So I'll just clarify that for you. So if we've got, here's 6 legal ways I'm going to fire through to avoid taxes on required minimum distributions. And, I'm not going to go into what an RMD is, but it's a required minimum distribution where you've reached the age where you have to take RMDs out of your qualified account. So, for the ones that have to do it, they're essentially in their 70s having to do so there. So rollover funds into a Roth IRA is one strategy to offset that, because there's no RMDs on that, is there?
No, you do have to pay the tax on the rollover. So it's not completely tax-free, but yes, you do get the growth. And that you and I agree on that, Gregory. That's one of the things that we talk about is playing the brackets in your 50s.
Now, if you were born between 1951 and 1959 and have a workforce retirement plan, you do not have to take RMDs starting at age 73. Yeah, 401ks, if you're still working, you don't have to take the RMDs from those accounts.
So, again, if you don't have to take your RMDs, it might be a good idea to have someone look at a Roth conversion, what sense for you.
And number 3, they say consider a QLAC. If you don't need funds from RMD starting at your required age, you can use some of that money in your 401k or IRA and purchase a qualified longevity annuity contract or QLAC. That allows you to defer that money to to a start date as late as 85.
We've seen that done more recently with the survivors. Usually it's the ladies that inherit a big retirement plan from their husband, and we've seen it go all the way up to that age, and it's worked wonderful because it's protected the children. And so it's kind of nice to see things actually work.
This is interesting when they put in this article here from Finance Buzz, and it's marry somebody younger. What they're getting at is if you've got a spouse that's 10 years younger, it changes the table on your RMDs, your distributions. But I don't know that that's a viable strategy. Like, oh, yeah, let me marry somebody younger.
I still like the Roth conversion, but better than that one.
Oh, I do too. I like that. Is one of my favorite is that. And the thing, and I'm not going to go through one of them is donate money to charity and time your first distributions correctly. But Roth takes RMDs off the table. You're doing a conversion right now, but you don't ever have to take RMDs. That money's going to be left to a non-spouse beneficiary at some point. They're going to have to spend the money down, but not until after 10 years of inheriting that Roth account. And they don't have to take RMDs either. It's a great wealth transference tool. Unbelievable tool when you think about it. And if we get into the rule of 72 and compounding, once again, it kind of blows your mind. But just leaving an inheritance that they can sit on for another 10 years and at 7.2% can double. You could leave them $500,000 that becomes $1 million in tax-free money. Yeah, you've been listening to Winning at Life. We've had Jude Heath here. Real quick, how do they reach you, Jude?
Just call Gregory's office or jheathcpa.com.
Yep, and my office, 504-832-9200, gregoryricksandassociates.com. We're going to take a short break. We'll be back with more Winning at Life.
News Talk 99.5 WRNO-FM, New Orleans, comes from the Mortgage Gumbo Studios.
Your locally trusted home loan lender, MortgageGumbo.com.
And waiting. I'm Paul Stevens, Fox News. Tropical storm alerts are set for the southeast U.S. coast as a looming storm system is on its way to becoming future Hurricane Imelda.
We have a budding tropical system, and get this, a Category 4 hurricane in the Atlantic. It has been very quiet thus far for the Atlantic hurricane season, and now all of a sudden the Atlantic has woken up, something that we have seen in so many seasons. And I got to tell you, if you live along the southeast coastline, you need to wake up this morning. Talk to your families about what your plan is going to be. This is potential tropical cyclone number 9. There is going to be an impact to the U.S. most likely, even if it's fringe impacts. The challenging thing is our computer models are completely divided, and we're not going to have clarity until we get farther into this weekend. The cone right now does call for a Category 1 hurricane staying offshore, but even with that solution, we would have very heavy rainfall that could last for days for the Carolinas.
Fox Weather's Britta Merwin. Tropical storm alerts already posted along the eastern Florida coast, and South Carolina has declared a preemptive state of emergency. The FBI firing agents who were photographed kneeling during a racial justice protest in Washington that followed the 2020 death of George Floyd.
About 20 FBI agents have been fired. Sources say they were pictured kneeling in solidarity during a racial justice protest following George Floyd's 2020 police custody death. Floyd's killing sparked global protests calling for police reform and racial justice. The firings come amid a broader shakeup at the FBI as its director, Kash Patel, moves to reshape the agency.
And that's Fox's Chanley Painter. The FBI Agents Association saying the firings are unlawful. They've called for a congressional investigation. President Trump on Truth Social saying he's directing troops to defend Portland and ICE sites from Antifa and other domestic terrorists with full force authorized if needed. America's listening to Fox News.
Stay on top of the latest forecast with America's Weather Team in the palm of your hands.
Here's the latest from America's Weather Center.
It's Fox weather updates throughout your busy day, every day.
That heat's going to be out there for one more day.
Temperatures being 30 degrees above average.
Put the power of over 100 meteorologists and the worldwide resources of Fox in your hands with the Fox Weather Podcast. Precise, personal, powerful. Subscribe and listen now at foxnewspodcasts.com. Connect to Fox News Audio on the Fox News app. Listen to hear your favorite hosts like Brian Kilmeade, Jimmy Fallon, and Guy Benson standing up for what's right, live and via podcast. Just click listen, then swipe right and hear the latest news updates on your time. And scroll down to hear the latest podcasts from Fox News. And it's even easier to listen in the car with Apple CarPlay and Android Auto. Get programming alerts and notifications. Fox News Audio is on the Fox News app. The voices America trusts. Download it now.
A Houston, Texas community is voicing outrage over a Halloween display that appears to promote violence against ICE agents.
The display in Houston's predominantly Hispanic Second Ward neighborhood shows 2 mannequins being lynched and 2 on the ground in coffins. The mannequins are dressed in black shirts, tan pants, and face masks, similar to ICE agents' attire. They're wearing red hats, similar to supporters of President Trump. Many are calling for the display to be taken down and the person behind it to be arrested. The display comes after a gunman, Joshua John, opened fire on a van at a Dallas ICE facility, killing 1 detainee and injuring 2 others. Deborah Valentine, Fox News.
Meantime, the federal government now facing a multi-million-dollar civil rights lawsuit over a California immigration enforcement raid that allegedly injured a U.S. citizen.
Ruffy Shoehead says he pleaded with ICE agents to allow his workers to retrieve documents proving they are able to work in the U.S. when officials turned up to his car wash in Van Nuys earlier this month.
I was begging him. I have a heart condition.
The 79-year-old U.S. citizen says he was respectful, but was thrown to the ground, had a knee pressed on his neck, was arrested and detained for hours without medical attention. He's suing the government for $50 million, alleging he suffered broken ribs, a traumatic brain injury, and claiming agents violated his civil rights. The Department of Homeland Security says the operation targeted 5 undocumented immigrants and that Shoehead was arrested for allegedly assaulting and impeding a federal officer. Kristen Goodwin, Fox News.
Retired Lieutenant Colonel George Hardy, one of the original Tuskegee Airmen, the historic World War II combat pilot group, has died at 19. Hardy became the youngest Tuskegee fighter pilot when he completed the Army Air Corps pilot training program back in 1942. His legacy being remembered as one of, quote, courage, resilience, and tremendous skill, unquote. George Hardy was 100 years old. I'm Paul Stevens. This is Fox News.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker. He has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
Your program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify, and wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love your show.
Investment advisory services offered through AE Wealth Management LLC. The firm is not affiliated with the U.S. government or any governmental agency.
You're listening to Winning at Life. Yep, the show we bring to you every Saturday. The financial talk show. If you want more about the show, more about me, your host, Gregory Ricks, go to gregoryricksandassociates.com. I'm CEO, founder of Gregory Ricks and Associates, the total wealth authority, advisors, and retirement strategies. Great team of advisors, analysts, service team, and relationship team. Great group of people to help and guide you with handling your money, your investments, your savings, your retirement planning, your income planning, your wealth management, tax strategies as well. Estate planning also. A lot of things we do, and we look at it as relationships. So go to the website, check out our process, and see if that's something you would like to explore, of getting some his point is some of our sponsors, which I'll start with Dwayne Stein of mortgagegumbo.com, Jude Heath of J. Heath Company, CPAs, Wesley Blanchard, W.J. Blanchard Law, Mosquito Joe. That's neworleans.mosquitojoe.com. I personally utilize their service, and really reason why, I don't like mosquitoes. Spitali's Deli and Catering in Metairie, Gregory Ricks and Associates, the Total Wealth Authority. I've got a couple others that I'll come back to you on the next segment and share some information about them as well. But you know, it's important to have resources and have people helping you also. A couple of downloads I'd like to give to you that I think is really important, and I think one of them has to do with your risk number. Look, the markets have been doing unbelievable. Happy markets going up for the year. But, you know, we had earlier this year that, say, the S&P down, and Dow was down over 10%. NASDAQ had dropped over 20%. Scary few weeks there. And then after, they got happy. You know, there's going to be a downturn coming again. And you need to have your assets working in a way that you don't get bothered by this. It's okay to be concerned, but not to make decisions based on volatility or movement. And then you've locked in losses forever. And you turn in short-term losses into long-term losses. And I also look at market volatility as also opportunity. You know, from time to time, we have threat of government shutdown. Why? The government spends more than it takes in. So they have to come to an agreement. Legislatively, they have to increase how much the borrowing limit of the country has to be increased so the country can keep operating. So it creates the government's ability to loan money to itself, so to speak. There. And then if Congress doesn't agree, there is kind of a deadline where there's no more shifting around money. It's out of money, so there's a government shutdown. That happens from time to time. It'd be nice if we never had to do it again, that the government operated within its means. So a lot of you can relate to that. Let's see. I can relate to that. I have a mortgage. I operate outside of my limitation on a short-term basis for convenience, because I use credit cards, but I pay them off at the end of the month. So technically, what am I doing? I'm taking technically 30-day loans at 0% because I pay it off. There's no interest charge. But the government's doing that, and when the government shuts down, it creates volatility. Why? How do I know this? Because it's what's happened in the past. We're going to have volatility. We may have volatility in a few weeks, but your portfolio should be built in a way that this doesn't cause you to lose sleep at night, to like, oh my gosh, it's going to hell in a basket, to put it clearly to you. And I was asked about this. I was asked by my wife, Stacy, about this. I said, I think there's a pretty good chance we have a government shutdown coming. And I can replay this for you in the future, and it's going to be relative to the future because it's relative to the past. Have we had shutdowns in the past? Yeah, we've had. I can remember a lot of them, and the markets responded differently each time. But typically, the markets do not like it. We have a government shutdown, and that's not incentive for the market to go up. It's kind of reflecting a crisis, and it's going to be a downturn. So she said, do you think there's going to be a downturn? No, she asked me, do you think there's going to be a government shutdown? And I said, yeah. She said, will that affect the markets? I said, yeah, the markets are probably going to go down. She said, And I said, and that therein is an opportunity as well. If the market becomes discounted, which we know, what does the market do? Historically, it pulls back and then eventually reaches new highs. What would I like? I like buying at discounts. I'm like, yeah, it's going to be probably going to be a government shutdown. Could be a few days, few weeks. I said, I'm not worried about it. It's kind of part of the drill. It's probably going to happen. I wouldn't say, well, it's not possible. It's not going to happen. I think it's more likely now than it has been in a while because those two sides just butt heads. But it is an opportunity. So don't make any knee-jerk reactions. If you're needing help with decisions on that, a downturn, call my office, 504-832-9200. info@gregoryricks.com is the email address. We're going to take a short break. We'll be back with more great information to help you win with your money.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
Could this be your Social Security, your 401k, pension, lump sum, your debt, student debt, credit cards?
You all are so good. I've listened to you for years. Sometimes I'll pull over to the side of the road and just listen.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify. Investment advisory services offered through AE Wealth Management LLC.
Gumbo Nation, you did it again. Thank you. 10 plus years on air, Mortgage Gumbo Dadcam has grown because of your trust in me as your local preferred lender with all your home loan needs. My recent recognition as a national top lender is awesome, but being your local lender is what matters to me and why I'm so thankful. I promise to continue to earn your trust in making your needs my priority. Visit MortgageGumbo.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Less than half of Americans have drawn up a will. If you don't have one, you know you need to get one. But what if you do have a will? Is it up to date? Has anyone in your family been married, divorced, or passed away? Have any new family members been born or adopted? Don't leave your loved ones in a bind. Call me and we'll make you a plan or update your existing plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
If you do not have money set aside, you do not have retirement assets, you don't have significant savings, you're thinking, well, when should I turn on Social Security? I'll answer that for you right now. You should probably work as long as you possibly can and as much as you can, because that means you defer Social Security as long as you can up to age 70. And you can keep working past that. That's fine. But at age 70, you have to turn it on because you've maximized it there. And you've created the largest possible payment, and you're going to need all of that.
Winning at Life with Gregory Ricks, Saturday mornings at 10 on News Talk 99.5 WRNO. Find us on the Winning at Life app or gregoryricksandassociates.com. Investment advisory services offered through AE Wealth Management LLC.
You're listening to Winning at Life. Hey, you know a great firm that sponsors this show? I'll help you out with it. Gregory Ricks and Associates, the Total Wealth Authority. Advisors and retirement strategies. See, I told you I could hook you up with somebody that could help you out with your money. Take my word for it. They'll help you out. Let's see. I've got, here's another sponsor that I failed to mention last segment. Want to give a shout out to Jeff over at JJS Audio, Video, and Surveillance. His website is jjsaudiovideo.com. And does a great job. He does a lot of that stuff for me on home audio, home surveillance, does alarm systems and monitoring and camera monitoring systems. We utilize him for those services, and it gives a great peace of mind being able to take a look at what's going on my property as well as my offices from time to time. I always kind of, here's what I do is I don't sit around looking at the cameras, but occasionally I will look and check on things, or something comes up or we're not aware and somebody asks questions. I can go back and look at video. But what I think that tells a lot is random looks. If I look at something randomly, and one of those random looks tell me something, I'm like, well, that means it's probably happening more. I should have a conversation, should do something about it. So that's why I think I like those systems. But, you know, if something was to walk off any property, yeah, I've got video of it. So it helps solve things and creates peace of mind. So, but I utilize him for home theater system and so forth as well. Great guy. Give him a shout out. And just like our other sponsors, Dwayne Stein of MortgageGumbo.com, Jude Heath of J. Heath Company CPAs, Wesley Blanchard of WJ Blanchard Law, New Orleans.mosquitojoe.com. Get rid of mosquitoes is what I say. Spitali's Deli and Catering, Gregory Ricks and Associates. If you use those sponsors, tell them Gregory sent you. That way I get some feedback as well from that. So it's always good feedback. And I always kind of say I'm an advocate of putting out good news about who you do business with. You know, it's always real easy to hate and when you get an aggravation. And sometimes, you know, you do business with somebody and it just doesn't go well and bothers you and you might get annoyed, and then you want to spend the next hour writing a ridiculously long negative review. And sometimes you might need to take a pause before doing that maybe they're just doing the best they can. And maybe it's not necessarily the business's fault. It just might have been an employee having a bad day. Before you go and do that, take a pause before you go hate on somebody or trying to ruin their business. What I'm an advocate for is showing love to those that do a great job. I like that. I think you should spend a few minutes, and you don't have to say a lot, just a few lines. But, you know, the haters go and write pages and pages. I guess they've got nothing else to do. It even goes for us. It wasn't we intentionally did something, and maybe we might have not allowed somebody, as an example, to come to one of our events. And, you know, me, I'd give you the pass. And maybe it was some criteria I had set somewhere in the past, and I'll tell you, we changed it. But what I'd like is, you know what, I think we do great 99% of the time, in my opinion. And I think other businesses do so as well. So I advocate kind of sharing that, because here's why. Think about it. Do you ever, you know, like on Amazon, ordering something, do you go check the reviews? I used to not think I did that. Then I got to thinking about it. Yeah, I kind of do that. And from time to time on traveling, if I'm going to a restaurant, hotel, I'll just check on reviews real quick. I'm not that detailed, but I don't mind checking the comments or the reviews. So it turns out we do that, and you may not realize it, but you do. If you don't, you might start doing it. So when somebody does a good job, I think it's helpful to go put in a few words for them, saying, hey, great place to eat, great place to do business. They're great at repairing my car when I take it there. Just something short, show that love. Be more focused on the love and not the hate. And I could go through businesses that have annoyed me. And I can tell you how many times on one hand I've written a negative review. 0. I just have kind of trouble with that. But what I don't do is write enough about the folks that do a good job. And that's where what we want to do is find the best in people and find the ones that are doing good and sharing it. And those that have great systems in place kind of say, well, they always take care of me there. Well, they have great processes. They have great systems. At our firm, that's kind of what we emphasize, is great systems, great training. And we're always training our people, and we're reviewing our processes to make it go well. And there's things that from time to time, I'll have these talks. It's kind of my quarterly talk about certain things. And it's time for this little quarterly update, something we're supposed to be doing, and we're dropping the ball on it, or we're not doing it as well. So I circle back to sometimes it just doesn't keep going. So I reinforce it. Let's make sure we're doing this. Follow this process. We have certain ways of doing things. We have to get out of our meetings on time. You know, we a while back had somebody get upset because their meeting didn't get started on time. The advisor was running behind in this particular office and ran behind, and the person got upset because their meeting was not started on time. Well, that's part of my process, is to see that it starts on time. When I got wind of it, we went and did retraining to make sure the advisors get out of their meeting on time so they're ready to start their next meeting. And we have help to get them out of their meetings on time. We're not there to camp out with you all day, because we have other meetings and we have to take care of them. You might be doing someplace and they've got all day to talk to you. We don't have that. And here's one thing, you know, you think about people in school, how students learn. How long do classes typically run? Even in college, 45 minutes to an hour. That's it. After an hour, you've lost me. We've lost you. That's a lot to absorb. And if we've got more to talk about, well, let's schedule another time and continue that conversation. And that's good use of time and allows you to absorb that and come back for more and more questions there. We're not there to wear you down like a car dealership would wear you down to sell that car, sign on that line there. And it's good to take a break or a pause, regroup, and come back for more. You know, there's also, I do a lot of personal training and go to conferences. I can tell you what, sometimes those things just wear me out for hours on end. Great stuff, but, you know, it's a lot to take in. I went to a conference not long ago, and I've got to go back through the material. And I know the guys well that presented, and I'd never seen them present in that way before. But you know, they kind of said, "So how was the about how the was the information that they put out?" I said, "We were being fed from a fire hydrant, not a fire hose, not a water hose. It'd been better if water hose, but it was like that's the most content I've had put out in 4 hours." And that was kind of their objective, was to put out everything they could and give you resources behind it, and it was being recorded and you can go back to it. I don't like doing that to the public. I don't do that on the show, and we don't do that to you in the meeting. And you can go online to gregoryricksandassociates.com and see our processes there on how our meeting flow works on a first visit, a second, a third, a fourth, advanced meetings that we do. Advanced planning, I'll define that. So even where you become a client, then the next phase we shift to is advanced planning. And then what that shifts to after advanced planning is your annual strategy meetings, depending on complexity, how many of those we would do each year. This is Winning at Life with Gregory Ricks. We'll be right back.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker. He has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
The program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify, and wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love the show.
Investment advisory services offered through AEW Wealth Management LLC. The firm is not affiliated with the U.S. government or any governmental agency.
What does your ideal retirement look like? Is it traveling the world, fishing whenever you want, spending time with the grandkids, or maybe you don't know yet? Hi, I'm Gregory Ricks. Let us help you plan the retirement you deserve. Give us a call or go to gregoryricksandassociates.com to schedule a visit. We are Gregory Ricks and Associates, the total wealth authority.
The firm provides insurance services, investment, and advisory services offered only by duly registered individuals through AE Wealth Management LLC. AE Wealth Management LLC and Gregory Ricks and Associates are not affiliated companies.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live, or you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
We are living in historic times, extraordinary times. A lot of people need help right now, and I want you to remember your local food bank. Now here in New Orleans, it's Second Harvest Food Bank. Over in Mobile, they've got Feeding the Gulf. But you can find your local food bank, feedingamerica.org. Food donations, monetary donations, or I know you've got some free time. Find your local food bank. Support your local food bank, especially in times like this. Do some good. feedingamerica.org.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlifecom or download the Winning at Life app. If you have a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
Everything I have, I owe to the Adult Literacy Center and getting my high school diploma at age 22.
Find free and supportive adult education centers near you at finishyourdiploma.org. Brought to you by Dollar General Literacy Foundation and the Ad Council.
News, I'm Jack Callahan. President Trump ordering federal troops to Portland, Oregon to protect ICE facilities against what he's called domestic terrorists. Acting ICE Director Todd Lyon says agents have been subject to verbal and physical attack.
It's disgusting and horrible. I'm on the ground right now in Dallas, meeting with those brave men and women that responded to those shootings and had to take sniper fire in a large American city. But to hear those people chant, shoot ICE, that's just uncalled for.
The president has authorized the full use of force by the troops and says deployments in other cities may follow. The National Hurricane Center still expects Tropical Storm Imelda to spin up in the Caribbean tonight, but now forecasts that storm will meander off the southeast coast rather than making a direct landfall. It will bring heavy rains to the coastline, prompting South Carolina's governor to declare a precautionary state of emergency. America is listening to Fox News.
Welcome to Winning at Life. What a wonderful day this is. What a wonderful country we live in. Just, we have so much divisiveness going on, and I think people spend too much time looking at the negative sides of things when there's so much opportunity and wonderful things that we have in this country. We have some wonderful people. We have 50 awesome states and great places to travel to, great things to see, tremendous history, and we have opportunity to be better, whether individual, household, family, your business, the company you work for, the community you're in. And we have opportunity to acquire and build wealth. There's a few places around the world that can be somewhat equal to what we have in this country, but it's a few. It's not like you can go to every continent, visit every country, and you have all these opportunities everywhere else, and you do not. You could focus on why you dislike this country and think it's better elsewhere. Maybe you ought to go overseas and live somewhere else for a while, and then you might really appreciate what we have. Or you think it's going to be perfect and everybody get along and you like everything. You know what? We all have choices, and we have choices to make. All investments aren't the same. All investments aren't going to make you happy. All advisors are not going to satisfy you. From our standpoint, we do our best and always are striving to get better. And we can always learn and will learn and train and work on our processes to improve what we do, because the ultimate is we want to be the best, and I believe we are the best. And we got the opportunity to create wealth. And one of the magic things is compounding interest. And that's where, the question I get from time to time is, well, I don't have emergency savings and I don't have investments. What should I do first. I used to kind of, and I'll go back, because you could pull radio audio from the past. And what would you find? I would focus on creating an emergency fund first. And you know what happens? I've adjusted that theory. Why? Because people drag their feet on building the emergency fund, or they build it up, then they spend it and have to start again. I believe emergency funds are some work in progress, always, and that's going to ebb and flow. But if you're waiting to get that just right to start creating that IRA, that Roth IRA, or start putting in that 401k, or let's define it as long-term savings, and those need to be separate from your emergency money, because those you don't need to be dipping into or fall back on. That is, I don't touch that pile of money that's growing over there. So if you're kind of say which start, you start both. You start putting some money every month in an emergency account. In time, it'll get to a good value. And a part of an emergency account, you're going to probably need it from time to time. That shouldn't be on a regular basis. It might be where you hit it once every few years because it's an emergency. Maybe when a hurricane hits or something like that, or big car repair, or your AC breaks. Your AC shouldn't be going out every year, right? Okay. That's when the emergency fund could hit if you don't have another resource to maybe charge it and then pay it off in a few weeks. Your long-term investing needs to be consistent, and it needs to start now. Why? Because of the magic of compounding. And you need compounding to start. If you put it off for 5 years till you get that emergency account just right, or whatever reason you've put it off, that 5 years you are never getting back. You can't go back and make that up. It's forever happening. You know, what's the magic money? It's your first $100,000. Well, Gregory, that's a ridiculous amount of money. No, it isn't. In time, you will get there if you're saving. But what happens with that 100,000? And I could even simplify it. Your first 50,000 is magic money, because at 50,000, let's just make it a smaller number for you. You're 50,000. You accumulate 50,000, whatever time it takes. If you're averaging, you get to 50,000 and didn't put any more money with it, and you're averaging 7.2% return, in 10 years at 50,000 goes to 100,000. Another 10 years at 100,000 goes to 200,000. Another 10 years at 200,000 goes to 400,000. How much did you put in? Probably a good part of that first 50,000. Of that other 350,000, how much did you add? Zero. It was the compounding. And that's why you need the compounding to start yesterday. Yesterday's past, so where do we start today going forward? If you don't have a Roth account, you should start one up, put $25 in it, and get it open. Why a clock ticking? Because there's a 5-year clock. You need to have those in place. That's for another discussion if you want the why. Just trust me, you need to get a Roth account opened up. If you got a 401k, some of that money needs to be going into the Roth part of it. But you need to get that 401k going. The day it's available at your employer is when you should start putting contributions. Well, I need all that money to pay my bills. Okay, you're going to need to take a second job. You're going to need to cut back on some spending. Why? You need that compounding interest to start, those compounding gains to start. You cannot wait, because you're going to be blessed a few decades out that you listened to me and got that started. And you should at some point work with a financial advisor. Why? You need a coach, People, well, I can do it myself. Well, I sure as heck wouldn't do heart surgery on myself. A lot of other things medically. I know some things. I do a lot of reading. It doesn't mean I go and do everything myself. Some convenience. I want the knowledge. I spend money on coaching. I travel and receive coaching. I've hired a team to come in and do training for some of our firm members here in a couple weeks. And it's real money I spend. I'm paying for their airfare and hotel to come in and do that. Why? It's going to make my team better. I hire professionals to help me coach. I spoke about Jeff Woods. I paid him serious money for coaching in the past, and he's got that book. Where did I put that book? There it is. I mentioned it in the show earlier, The AI-Driven Leader by Jeff Woods. That's Geoff. Great guy, super smart guy. Psychology of money. Great fundamentals of understanding about money. Once again, there. Okay, I digress. 7 things you should own in retirement, according to Kevin Loom of GoBankingRates.com. One of the things he first suggests is have a home gym. I just had one. Well, I've kind of had a home gym, but I actually just had a tonal machine installed last week into my home. Why? I need to focus on strength training. You know, I've taken it for granted. I don't always make myself do it, but I need to be doing it several times a week. Why? Doing exercise is good for your health. I'm kind of health focused. You should be too. If we're going to build all this compounding wealth, we need to live longer so we can enjoy it, right? That's the first one. I'm going to give you 6 other items when we come back from the break. Thanks for listening, but we got a little bit more for you. This is Winning at Life with Gregory Ricks.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
I started my retirement about 5 years ago, and I truly am late in life.
Would I be better to just withdraw the money out of my GSP and pay that mortgage off?
My problem is I have champagne tasting of your salary. What is a balloon note?
Is that cutting it too close?
So will I still be eligible for Medicare?
Is there anything better I can do with the money I transferred into the Roth from my 401k? My goal is to retire at age 60. I'm 54 right now.
Hey, I have a 9-year-old son, and he's got probably $2,500 in. Is there anything we can invest it in?
And I just started a 401k a little late in life.
Then that should be like 10%.
Now, how far in advance do you recommend that someone goes to visit the Social Security office?
I want some money in a casino playing poker.
Gregory Ricks and Associates, 504-832-9200 or gregoryricksandassociates.com. Investment advisory services offered through AE Wealth Management LLC.
Oh, Rover, you have fleas again? Prevent fleas and ticks from setting up shop in your backyard. Those bloodsuckers can bite up to 400 times a day and carry nasty diseases like typhus and tapeworms. Give Rover some relief and contact Mosquito Joe. Their mosquito control services also kill and prevent fleas and ticks. Let Mosquito Joe be your first line of defense against those blood-sucking pests. NewOrleans.MosquitoJoe.com. NewOrleans.MosquitoJoe.com.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I'm your host, Gregory Ricks, a financial advisor here to answer your questions and help you win with your money.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
That's exactly what I needed to know. Simple information from good people.
Investment advisory services offered through AE Wealth Management LLC.
The Ricks Report with Gregory Ricks.
At the core, I always tell people, I'm not here to make you rich. I'm here to make sure you don't run out of money. that you don't run out of income. That's how I look at my job. Over time, saving, making good decisions can make you rich. But what you have is, what is your core thing? Your core thing should be making money. And your core thing, you should set aside money to work elsewhere. It doesn't necessarily mean you have to put it to risk. You could put it to safety. But your core thing makes you money, or you tell me your core thing is the market, day trading, or gambling in the market. It shouldn't be. You should have a core thing that makes you money, and you peel some off for the future when you're done with your core.
Winning at Life with Gregory Ricks, Saturday mornings at 10 on News Talk 99.5 WRNO. Find us on the...
Hey there. Hey, thanks for joining us today on Winning at Life. I've got to complete this topic, and I'll share with you once again the topic by Kevin Lum, 7 things you should own in retirement. And it's a Go Banking Rates is the sponsor of this article, gobankingrates.com. First thing they said is 7 things you need to own in retirement. So I thought there's a few good ideas here, and one is a home gym. If you're the kind of person who has trouble getting to the gym, Lum recommended investing in a few pieces of equipment that you'll actually use to create a home gym. I've got a bench. I've got some barbells, not in some serious weightlifting deal, but the problem is making sure you take the time to do that. And you probably should do some sort of exercise and weight training 3 times a week. I know this because I like coaching, and that's why I suggest you hire a financial coach. You should have other coaches, but I also have, and I hire coaches, like I mentioned, Jeff Woods has been one of my coaches in the past, among others. But what do I have? I have a health coach. And you know what the health coach does? Fusses me about not training and talks me through that. Also helps me with my diet and getting the protein and proper eating, and they're monitoring that. And guess what? Yeah, I've got a coaching call coming up here in a few days with that health coach, and yeah, I'm probably going to disappoint her, but I'm working on it. And one of the things she's been after me most of the year is to get a tonal machine. Why? If it will help motivate me to do my workouts, that will help me be stronger and live longer. And so have a home gym, some type, so you can do some exercise. I'm not one of those that wants to go to the club in the neighborhood or the workout place. I just don't do that. I don't have the time for that. I do like walks. I do like swimming as well. Number 2, a good night's sleep. It is really important that you have an environment that you sleep well in. Another investment in your health is to get a good night's sleep, according to Lum. Think about your sleeping challenges and what may help. For example, a more comfortable bed, even an eye mask or supplements that may help you sleep better. A couple of things we've done is, look, I keep my bedroom cold. I sleep better when it's cold, and I like it dark. We put a night light in a certain area that doesn't affect where I'm sleeping, but if I have to get up during the night, I don't run into a door because it's dark in my room. We want to sleep well. Better sleep at night may be as simple as changing your mattress to one that better suits your body. It can be that simple, but it's important in retirement that you sleep well, get a good night's sleep. Have a reliable car with a long warranty. Don't know how you look at retirement, how you look at owning a vehicle, but no one wants to spend the first few years of retirement dealing with continual car breakdowns and costly repairs. You need something dependable And if it breaks, have an answer to getting it solved that doesn't create you a lot of expenses. So we need reliable transportation. If you travel, it's always good. And another thing he suggests is great luggage that's easy to deal with, that kind of fits your personality. Lum insists that great luggage is a must if you plan to travel in retirement. Well, I travel a pretty good bit, and my wife and I have kind of a system about that works for both of us. Of we typically do check luggage, but we also have carry-on for what we need during the flight and so forth. And if we get there and our luggage doesn't make it, we kind of have what we need with us also. And it's where we can help each other with it, because you got to be careful with the bigger bags that you check. You could fill things up and they're too heavy. You don't need to injure your back pulling it into the vehicle or and so forth. And it's where it's designed where we can help each other with it and not have one or the other picking up too much weight. You need a comfortable and functional home. Upon retiring, most people will spend a lot of time in their home, which is an opportunity to invest in a few upgrades to make it more comfortable and functional. Lum said to consider what is important to you, like improving the kitchen, if you like to cook, or maybe sprucing up the backyard, if you like the outdoors, or how about a combination of both. You got to make it that it's an enjoyable, healthy place for you. We're getting to number 6 here. Lum, you know what he lists? I talked to you about this. I talked to you about this last segment. Having an emergency fund. Lum said that life and retirement can be unpredictable, and having an emergency fund cushion can prevent your retirement budget from derailing. He recommends setting aside 6 months' worth of living expenses, somewhere that's fairly liquid, like a high-yield savings account, money market account, or a short-term government treasuries. I'll take that a step further. I think your emergency account should be larger than 6 months of expenses. I think it should be at minimum a year's worth of living expenses, because some of your surprises could be bigger in retirement. I look at retirement as going a long time, and I'm not pulling more money in it, and I don't want to use my retirement account that's kicking out income as my emergency account. You may put in, you know what's a great emergency account? $50,000. Yeah. Depending on your asset level, it should be as much as $100,000. What if your roof needs to be replaced? You got to replace a car. You have a health emergency. You don't need to be dipping into what's creating your monthly income and dent that, unless it's got that built in, you've got that kind of margin. Most people aren't. If they go dipping into their retirement account that's generating monthly income, they're likely to impact future income. So think about that emergency. You don't think about it the same way as when you were working. When you're a worker, 6 months income is a good rule. But when you're in retirement, I think it has to be a bigger number from that standpoint. And here's number 7, and I totally agree with Lum on this one as well. So before I give you that, I'm going to retrace. He said you need a home gym. I agree. You need a great night's sleep. I agree. That's important, both of those. A reliable car. Yes. Great luggage when you travel. I travel. I know that, and luggage that you and your spouse can help each other with. A comfortable, functional home. Home needs to be a great place to be at. Emergency fund, you need a year's worth of expenses at minimum. Number 7, financial advisor. A financial advisor is one of the most valuable investments you can make before and after you retire. You need somebody to be a sounding board, to give you ideas, that has vast experience, that works with lots of clients, so they're used to seeing all these scenarios, and somebody you can just have conversations with. Hopefully this helps. Hopefully Winning in Life helps you on Saturday. Thanks for joining us today. Y'all have a wonderful weekend, and God bless you all, and see you here next Saturday. I'm out.
Investment advisory products and services made available through AE Wealth Management LLC, a registered investment advisor. Insurance products are offered through the insurance business Gregory Ricks and Associates Incorporated. AE Wealth Management does not offer insurance products. The insurance products offered by Gregory Ricks and Associates Incorporated are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying ability of the issuing carrier. This radio show was intended for informational purposes only. It is not intended to be used as the sole basis for a financial decision, nor should it be construed as advice designed to meet the particular needs of an individual situation. Gregory Ricks and Associates is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Gregory Ricks and Associates. Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences, including but not limited to a need for additional tax withholding or estimated tax payments, the loss of certain tax deductions and credits, and higher taxes on Social Security benefits and higher Medicare premiums. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. Third parties and guests of the show are not affiliated with, nor do their opinions reflect those of Gregory Ricks and Associates or AE Wealth Management. AE Wealth Management provides services without regard to political affiliation, and the views of individual advisors are not necessarily the views of AE Wealth Management. We are Winning at Life with Gregory Ricks.
WRNO FM, New Orleans, #1 on your presets, in your car, and the new and improved iHeartRadio app. Free never sounded so good.